Yeah, now we're talking. Now we're talking back to work, back to work. Hope you guys had a great week last week. I missed you guys last week, but it's time to get back to work. So now we get some money to make this week. It is Monday evening. We're getting ready for a big Tuesday trading session, and boy, do I have some great trades I'm tracking for tomorrow. As always, I'm going to go over my favorite trades in the video here tonight. That we have a game plan to make some money on Tuesday. Now, before we jump in and talk about my favorite trades for tomorrow, before we get started, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoyed this stuff tonight, if you like these videos, do me a favor, will you? Hit that like button. Give me a shout out. Give me a holler down in the comments section below. Thank you so much for tuning in, sticking around tonight, supporting the YouTube channel. But enough of the intro, right? Let's get into it here tonight. Where are the best trades setting up here for Tuesday? Well, I'll tell you, very interesting charts here tonight. The S&P and the Nasdaq are both very range bound, you'll notice. We get some big news coming up later on this week. Now, I love range bound markets. If you've watched my videos before or you've taken my free trading classes, you know I love ranges because ranges act like magnets. Now, with that said, there's one very small but very important difference here. For example, the S&P is bullish into a trading range right now, while the Nasdaq is bearish into a trading range. That small difference here tonight will probably tell us where the best money-making opportunities are going to be here for tomorrow, and we'll talk about kind of how to apply those different directional biases to find some nice big winning trades here on Tuesday. We'll talk more about that as we go deeper into the video. Now, speaking of Tuesday, let's cover the schedule here for tomorrow. Let's all get on the same page for tomorrow. There are two things that you want to be aware of for tomorrow. First of all, there's no major news that we know about right now, but we do have that two-day NATO summit on Tuesday and Wednesday this week. This normally wouldn't be a very big deal for us because the situation happened in Ukraine. There's a couple countries, I think, right, Sweden, right, trying to get into NATO right now as well. So I'll definitely be keeping an eye on that over the next 24 to 48 hours. We may get some surprise announcements out of that NATO summit at some point tomorrow. We just simply don't know when. So we'll definitely be keeping an eye out on that tomorrow. That's definitely a known unknown on the schedule for tomorrow. The second thing you want to be aware of is that CPI number coming out on Wednesday at 8:30 Eastern Time. This is definitely the biggest news of the week, and you could probably assume that when you think about those ranges that we saw on the charts a moment ago, you have to think the markets might be a bit nervous, right? A bit anxious, a bit, again, a bit nervous ahead of that CPI number, which is going to be on everyone's mind on Wednesday. So I'll tell you, when you look at that CPI number on Wednesday, the nerves and the anxiousness that it can be kind of building up ahead of that, and then you go back and look at those ranges on the charts here tonight. If I had to guess right now, I would guess that probably the best money-making trades for tomorrow will probably be fake out breakouts. Ranges act like magnets, and so fake out breakout, right, off the lows, right, fake out breakout off the highs as we kind of consolidate ahead of that CPI number coming in on Wednesday. Now, let's talk about my favorite trades here for tomorrow because the money, of course, is made on the charts. I'm going to go S&P first, then we'll go Nasdaq. Everything I talk about tonight, though, can be applied to either one of these markets. So just be aware of that. The E-mini can be applied to the NASDAQ can be applied to the E-mini or the SPY. Now, jumping in right now to the E-mini first, what's the most important information right now on the E-mini or the SPY that tips us off to where the best trades are setting up here for tomorrow? Let's take a step back here real quickly and look at the 60-minute chart. The 60-minute chart really does a good job at kind of painting a picture for us so we know how to filter for the best trades here for tomorrow. Now, a couple things. First of all, we are definitely overall bullish on the S&P, right? Very difficult to call this a bear market right now. So we're overall bullish, which means I'm leaning towards the buy side. The next thing is this strong run higher? Now, anytime we see a strong move in one direction, and we talked about this a few weeks ago before we went off on that holiday break, anytime we see a strong move in one direction, we expect to get a pullback and a retest of that high. So right now, the buyers, they pretty much know where they want to go. The buyers want to go back and take out that high. That strong move has not been retested. Now watch what happened from there. After that strong move higher, the bears got their own strong move and got that strong run down. Now you'll notice right away that strong move has been retested. Strong move down, pulls back, and retest that low. In my trade room, we call this mission accomplished. So think about the scenario. We're overall bullish. The buyers have kind of unfinished business, if you will, with that retest of that high. But meanwhile, the bears, they already got their retest. So at this point now, we should be seeing buyers here that will try. And again, the kind of the variation on this right now, the question mark is will we get, will it be easy ahead of that CPI report coming on Wednesday? But all things equal, though, we should be looking to rotate now back up and take out some of these highs overhead on the way back up to retesting that high. You'll notice there's a range right in the middle, and as you guys learn in my free trading classes, ranges love to rotate. They'll rotate down, rotate up, rotate down, and we should be looking for that rotation back higher here. So we definitely have the bull side on our radar right now. Again, the only kind of question mark on this is how will we do before that CPI number comes out? I don't think anybody should be surprised if we saw a head fake or a fake out breakout off of that low. That would not surprise me one bit, again, because we have that CPI number coming on Wednesday morning. So buyers are in control of this right now. They're trying to take out this 44.76 there in the short term and ultimately back up to retest the big high. But again, be aware of that nervousness and the potential head fake or the fake out breakout we may see going lower here as well. That's the big picture on the S&P. Now let's go back to our tick chart. All of these tonight, by the way, are tick charts. You can see the time frames in the upper left-hand corner. I like to use tick charts to trade off of. They make pretty much everything easier. And this, of course, is the 21 EMA, right? That's the one we use every day in our trade room to find some nice winning trades in the morning trade room. Now, back to our tick chart here right now. Now look at what we have in front of us, right? We have that pop up into that trading range. And as I mentioned before, ranges love to rotate, right? So they break down and they're trying now to rotate higher. This is that same level I marked up on the 60-minute chart, up around that 44.75 area. So we definitely do anticipate there could be some breakouts going higher here on the S&P. Like I mentioned earlier too, I also really like the idea of a possible fake out breakout and a buy off of that low, because look what we have down here, a nice strong move down for the bears. Anytime we see a strong move in one direction, we have to anticipate a possible attempt to retest that low. So we've got some pretty good setups we're tracking here for tomorrow. The key that you want to think about here is if we end up going higher here, is there are two basic principal setups you look for whenever we have a trading range and a breakout. Okay, there are two key patterns. You guys are learning these inside of our free trading course. But think of it this way. As we go higher, right? As we go higher, we don't want to be buying too high up here. So we go looking for what are called bear traps, right? Bear traps are one of the 4 entry patterns you guys are learning in our free trading classes. That bear trap is the best way to get into this if we do end up rolling higher here in the pre-market or early tomorrow morning. Again, bullish into a trading range. We're rotating off that low. We should be looking to punch right up around that 44.75. And the way into that is with a bear trap to buy as low as you can. Now, the key is that oftentimes these moves will make a measured move, one leg and two leg. Oftentimes, once they reach that measured move, they'll begin to pull back. This is where breakout pullbacks come in handy. We pull back, and now you want to think about these prior highs and use these areas now as key levels of support. So as we break out, looking for bear traps, and then as we get, again, think about like a measured move, one leg, two leg. Once we get two legs up, oftentimes we pull back, and this we look for that classic failure pattern below the 21 moving average into a pullback combination for a retest of that high. You guys are learning about these inside the free trading course, right? So again, think about this scenario. This is a very important, very common scenario with a bull market trying to break out of a trading range. In the short term, right, it's a bear trap going higher, right, getting in below that low, right? So as we go up, strong move, shallow pullback, higher high in price, and that trap below that low, okay? Now, again, remember, these oftentimes will go one leg, two leg for some symmetry. We talk about measured moves in the free trading course, right? So bear trap on the way up. And then once we start getting a bit too high up here, then we start thinking about, okay, let's not buy high. A lot of momentum now for the bulls. Now think about that high right there. Bring that over. That becomes support. And then think about it, right? The moving average comes up. We'll oftentimes see it dump off that high. And this is where we look for that failure pattern, right? Trap those bears in, get the bears trying to sell short off that 21 moving average. Their stops are sitting right there, and we can use those stops as fuel for a failure. As you guys know, I like to use what's called a failure into pullback combination for that run going higher. All right, guys. So again, these three setups, bear traps on the way higher, right? Trap low, bear trap. And then as we start making our way up the ladder, we don't want to buy too high, want to pull back, get somewhere down around these key, what was resistance, become support, and then trap those bears with a failure pattern, and then right, and then buy that first pullback with that pullback combination. Now, I'm going to talk a lot more about traps, failures, and pullbacks as we go deeper into this video. I know a lot of you guys and gals watching right now have taken my free trading classes. You learned all these entry tactics, but if you're one of the few folks watching right now who haven't taken that free video course to learn my favorite entry patterns yet, what I'll do is I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course, because the strategy I teach in that free video series will show you a simple trick to know exactly where the best winning trades will be each day. And I'll teach my 4 favorite entry patterns to help you start making money on your own. If you're missing the best trades each day right now, if you're taking too many losses, definitely grab that link that popped up there. Take that free course. It is perfect for someone trying to make the jump into full-time trading. There's a lot of examples as part of that free class about things like bear traps on the way higher, deep pullbacks, failure into pullback combinations as we go. Now, I want to talk about that head fake going lower. All right? I want to talk about that head fake going lower here, but how do we sell off the high, right? What if we end up blasting up, we run into overhead resistance? How would you sell this thing? Because again, like I said earlier, we got Wednesday CPI, lots of ranges acting as magnets. I think there's definitely money to make on the way going higher here, but how do we sell it going back down into that trading range? What's the problem? What's the problem? The problem is momentum. Right? Momentum is the problem. If I want to sell, see right now, momentum is bullish, right? Rotating off of that low. I can be relatively aggressive, right? On that move going higher here, buying that bear trap. But trying to sell off the high right now, it's a different story, right? At that point now, we're very, very bullish. And so how do we do this? Well, we need 3 things. 1, a major turning point, like a high, like a pendulum swing. 2, we need signs of exhaustion. Right? And in my eyes, that means 2 tries from the buyers. Let the buyers try once, let them try twice, and then 3. We need a stop run. We need some sort of catalyst. And this is where a crown reversal pattern is perfect for a reversal. Now, watch how this pattern sets up here right now, because it's very, very important you see the basic principles of it. So again, if we do find our way up around these highs, okay, we're not going to buy into those highs. We're waiting for that deep pullback to buy from there. On that pullback, okay, on that pullback, if buyers are foolish enough to buy into that high, that's exactly what we can look to trap in those buyers with a crown reversal. Okay, all this is, guys, it's a 2-try failure pattern along with a bull trap. Right? You guys will learn both of those in the free trading course. That's all it is, right? It's a 2-try failure. Buyers try once, buyers try twice. Their stops should be sitting right below that low, and I want to use those stops to fuel this reversal back down into the range, because again, it's a very bullish environment in this example. So all we're doing here is we're combining a failure pattern, 2 tries for the buyers, into a trap pattern, right? That bull trap to trigger that domino to short this thing back down into that trading range. Another variation of that, one more, and then we'll talk about the head fake off the low, would be if we end up running higher and getting crushed and running back down again, right? Like we saw back there again with Wednesday CPI, lots of ranges. It should come at no surprise to see a head fake off the high. Watch for a V top off the high. If we pop up and then really slam back down and begin to grind back down here, these are pretty easy. Watch closely. Draw a trend line off the lows, bring it up around the high, and then start looking left. Find those prior swings and look for that bull trap right above that high. Now, I love traps. You can tell I love trap patterns. They're my favorite, especially on a reversal. But this could be a trap setup. It could be a failure pattern. It could be a pullback combination. Any of the valid entry patterns you guys are learning in the free trading course to sell off of that high. So now we have a couple different ideas in our toolbox here for tomorrow. Be aware again of that pop-up, that breakout pullback, and go. And we'll see if we can get some buyers trapped in for that short going back down into that trading range. Now, I want to talk next about the fake out breakout potential going lower here, because like I mentioned earlier, that really could be a definite viable option here for tomorrow. Let's go look at the Nasdaq here now. The Nasdaq, of course, is a little bit different. It's quite similar, but it's going to be a little bit different here. Over on the tick chart right now, a 5,000 tick chart here on the NQ, and of course the QQQs. Let's take a glimpse here, because you can definitely see that bearish market into a trading range here right now. Let's step back here for a moment and look at that 60-minute chart, because you'll notice right away the Nasdaq is a lot more balanced, a lot more mixed, definitely not as bullish as the S&P is, and you can see why. Now, first of all, we're definitely overall bullish right in the Nasdaq, right? We're definitely overall bullish. It's very difficult to call this a bear market, but we're not as bullish as the S&P, and you can probably see why. We had a very strong run up, right, end of the month of June. That strong move, what do you see happened? They pulled back and they retested that high. That takes the pressure off, right? That means mission accomplished right now for the buyers. Anytime we see a strong move like this, we're expecting a pullback and a retest. So that's mission accomplished for the buyers. The buyers no longer have that kind of unfinished business like the S&P does right now. Now, look, we drop back lower here now. That is a strong move going lower. And what happens? Yeah, we pull back. We retest that low. Right? Now, this is nothing different than the S&P, right? The S&P did the exact same thing. And you would think that at this point now, we should be trying to make our move back up and create one big range in here, right? And take out some of these big highs. Yeah, but this is the big variable. The big variable is this range down here, right? Very bearish move into a trading range. This trading range is really the big reason why you've got to be very careful being a buyer going higher, because that's the most recent trading range. Ranges act like magnets. It's also one of the big reasons why I think bears have a great chance for a reversal going lower. And I love the idea of a fake out breakout or a head fake off of that low for tomorrow. That's definitely one thing I'm looking forward to tomorrow morning in the trade room. So that is, as you can see here, we definitely are still leaning on the buy side, but unlike the S&P where we expect this thing to kind of rotate higher here, obviously again CPI number coming on Wednesday, some nervousness there, right? But on the Nasdaq though, very small but very, very important difference there is that most recent trading range, which will probably try to drag this thing lower and give buyers a chance to tee this up right down around that, around this area here, right? That 63 and a quarter down to that 0.21. One thing also in my mind right now is earnings next week. We've got some pretty big earnings coming out next week. We'll see some tech company earnings next week and the week after that. So it might be a bit of a bumpy ride on the Nasdaq over the next, week and a half, 2 weeks here. Just looking at the chart right now, a lot of back and forth, a lot of two-sided trading right now, which is fine by me. Just buy low and sell high, right? That'll be the name of the game here until something changes here for tomorrow. Now, back to our tick chart. Again, everything is easier on the tick chart, and there's that trading range, right? There's that trading range with that bear bias. Now, the same game plan applies on the S&P, right? So on the Nasdaq as the S&P. So as we go higher, not as desirable as the S&P, but as we go higher, the way that you buy this is a bear trap, right? It's the only way to buy it. And then as we start getting up around this area now, this is exactly where maybe a crown reversal, right? Buyers once, buyers twice, that bull trap off the high. That'd be a great short again, because now it's bear market into a trading range. So I like that short off the high, or potentially a V top off the high like that. Draw that trend line off the low, up around that high there, right? Is that making sense, right? Look left, grab that first test off the high of that channel. So either one of those, I liked it a lot. The one thing I don't like as much on the Nasdaq is that breakout pullback. Right, the breakout pullback, like I mentioned, the S&P doesn't seem as likely. What's more likely right now in the Nasdaq is that bear trap on the way up, but there's only a very small space up here. So once we take out that bullish objective, we run into some overhead resistance. Then of course it's all about trapping those buyers in 1, 2, crown reversal off the high, right, or that kind of pop and grind move going lower there to short there off top of that channel. All right. So a lot of the same stuff there on the Nasdaq as the S&P. Now, as we go lower, if we go lower, not going to be easy to be a seller going lower, unfortunately. The only way to really sell this thing kind of easily is to go up and then sell it back down again. The reason I say that is because you have this channel waiting here, and this will be a little bit difficult to sell short here right into this area. The way that you would try to sell short on this, if you wanted to do that, was to use that same bull trap principle I mentioned overhead, right? So as we go lower, buyers are trying once, buyers trying twice. You'd really have to get rid of that here for a second. So as we pull back, right, buyers once, buyers twice, that will be the only safe way here right now to short this thing going lower, just because, again, you've got that channel coming up, and again, you've got that kind of overall bullishness on the S&P. So not my favorite trade in the world, right? But that'd be the way you would short this thing going lower. There could easily be a channel coming down off that low, right? Mark off that high. So not a horrible setup, but again, location isn't that great on it. Overall bull bias. So again, trade carefully on that. Smaller position sizes on trades like that. Now, we find our way down around these lows here now. Okay, that's where the fun starts. Now, if we do take out that low, remember we have trading range, overall bull bias. This is where I definitely think some fake out breakouts, some head fakes can be some easy money potentially here for tomorrow. Now, if we go lower, it's a great place to be a buyer, right? Because we're sitting at support, right? Support trend line, support level. It's a great place to be a buyer, but it's a horrible what? Momentum. I'm always kind of asking myself these two questions. If I want to buy down here, how is my location and how is my momentum, right? Those are the two questions you want to answer. Great location, right? We're at support trend line, support level, range above us, acting as a magnet. It's a great location, but that's all it's great, right? Momentum is going to be what? Pretty bearish. Bearish in the short term, bearish rolling off the high. So in order for me to want to buy down here, I have to respect the sellers. I have to give them the benefit of the doubt and let them try a couple times, right? It's very difficult to pick the absolute bottom. I'm not a very big believer or a fan of trying to pick the bottom, right? Rather than picking the bottom on this, I'll just wait and see if the bears get trapped in here. Let them try once, let them try twice. And the reason why I want 2 tries on this is because of that bearish momentum in the short term, right? For all I know, this thing will keep on going. I don't want to get run over by that freight train. But if I can get bears coming in trying twice, now we know exactly where their stops are, and we can use those stops to fuel that reversal. Now, oftentimes what happens is these things will stop out the bears. The market will rip higher here, and you can grab that rotation going back up in the opposite direction. My favorite trade on this as we go higher will be that bear trap setup. Okay, so keep an eye on this pattern, this kind of sequence of patterns here if we do get that head fake or that fake out breakout off the low. Again, trap those bears in, use 2 tries, right? And then as we start to make our rotation, because again, ranges love to rotate. They'll rotate down, up, down, up, down, up, down. They want to rotate back up, right, and take out that high, right? They'll want to rotate back up and take out some of these big highs up overhead. As we make that rotation off that low, it's all about going in and grabbing, and usually this will be a new channel right there off that high, and then bring it down to that low. We call these the first test, right? First test is the best test. You want to grab that first test. The moving average, of course, will pull back, right, and grab it like that again. So again, a 2-try failure pattern. Trap those bears in, use their stops as fuel to run this thing back into that trading range above. And again, as we go higher, my favorite trade on this is a bear trap right below that prior low like I'm showing you on this. But in all reality, it could be a failure pattern. It could be a pullback combination. All the entry pattern setups you guys are learning in that free video course. All right, guys, so keep an eye on that. Now, another variation of this, just to be prepared for, sometimes we get these strong breakouts going lower, and they may pull back, and they may retest that low. Remember, anytime we retest a high or a low, it resets the count. In other words, if we do see that strong move down, and of course, it makes perfect sense at this point. They would try to retest that low because anytime you see a strong move, we know to expect a retest of that low. Once they retest the low now do it again, right? Count again. 1 try for the bears, 2 try for the bears. Again, once I retest the low, we restart the count, right? So we run lower, the bears try once, and they retest it. They retest, reset the count now. Bears once, bears twice, stops are right there. Bingo, right? I can buy with that failure pattern, that 2-try failure. Again, 2 tries because the short-term momentum is so bearish, right? So just be aware of that kind of variation off of that low. And again, at this point now, it might easily rip and run higher. And if it does that, don't chase after it. Go find some swings, go find some channels, and go grab that channel, and don't miss that first test off the low of that channel. Does that make sense? Right? So we're buying off the low, and judging on what we're seeing right now on the Nasdaq 60-minute, I wouldn't be surprised if this is the best sequence that we get here for tomorrow. But either way, though, right? Either way, the game plan is prepared. Now all we need to do is give us some time overnight and see if we get here for tomorrow. Now, speaking of tomorrow, I'm sure I've missed something tonight. I've covered my favorite trades for tomorrow, but I'm sure the markets will do something tomorrow we don't expect, but that's we have our trade room. We open up every morning, 8 o'clock Eastern time. If you like these videos, you will love my free trading classes and, of course, our morning trade room. We get together every morning at 8 o'clock Eastern time, and we trade this stuff together. It's a great place to learn and trade along with me. I'll put all the important links you guys need, the description of the video here tonight. I'll put the free trading class links. I'll put the membership links down in the description. Definitely grab those links and get joined up, especially the free trading course, that we can learn all the entry tactics I'm talking about in the video here tonight. If you need help getting registered, or if you have any problem getting into the free classes, don't be afraid to call the office. I'm always here to help out. If you guys need help along the way, we got toll-free phone number, we got email, and of course we got live chat on the lower right-hand corner there of the website. So don't be a stranger. If you need help getting started or help getting into our free classes or any help along the way, definitely don't be afraid to reach out, call the office, or use live chat in the lower right-hand corner. All right, guys, hope you enjoyed the video tonight. Hope you learned a bunch. Hope you use this knowledge and this game plan to make a killing tomorrow, and hopefully I'll see you tomorrow or sometime soon in the morning trade room. If not, we're going to come back tomorrow night and we'll do it all again and get ready for Wednesday's big CPI number in tomorrow night's video. Either way, thanks for watching. Thanks for being here. Great to be back here with you guys as always. Now get out of here. Enjoy your evening. Rest up. We'll see you guys tomorrow. Be well. Be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.